Bitcoin flat below 26,000 US dollars as rate hike woes cool down. Now, Bitcoin edged up on Monday morning in Asia, but remained below the 26,000 US dollars resistance level, giving up much of last week's gain from the favorable court ruling on Grayscale spot Bitcoin exchange traded fund application. Ethereum also stayed range bound at around 1,650 US dollars, while other top 10 non-stablecoin cryptocurrencies traded mixed, with XRP leading the winners and Dogecoin the losers. U.S. stock futures edged down Monday morning after Wall Street closed a week higher on the cool-off in the U.S. labor market that suited the concern for more interest rate hikes. Bitcoin gave up gains from Grayscale's victory. Bitcoin edged up to 0.30% in the last 24 hours to 25,958.25 US dollars as of 7:30 a.m. in Hong Kong, and traded 0.46% lower for the week according to CoinMarketCap data. The world's leading cryptocurrency lost control of the 26,000 US dollar support level on Friday and fluctuated around the mark over the weekend. Bitcoin briefly reached a weekly high of over $28,000 last Tuesday on a court ruling that required the U.S. Securities and Exchange Commission to review asset manager Grayscale's Bitcoin ETF application, but soon gave up all the gains after the SEC delayed all pending ETF application on Thursday. While investors might be looking at the Grayscale versus SEC development, it seems as though the recent price action is linked to activity from the FTX wallet, igniting the fear of a potential dump as some or all of this asset would be liquidated into a fiat for expenses, repaying investors, said Justin Leanathan, head of Asia-Pacific business development at the Belgium-based crypto market Maker Key Rock. A Solana-based cold wallet owned by collapsed crypto exchange FTX transferred over 10 million US dollars worth of cryptocurrency, including Link, Sushi, Luna, and YFI to Ethereum addresses from August 31 to September 22, according to Arkham intelligence data cited by blockchain journalist Colin Hu. Both Bitcoin and Ethereum prices are below their 50-day moving averages of $28,299 and $1,789,000, indicating the bearishness in the prices. Marcus Thielen, head of research and strategy at digital asset service platform Matrixport, said in the Monday report at Matrixport. In the past month, the world's leading stablecoin USDT has lost $1 billion in market cap and consistently traded below the 1:1 peg with US dollars, according to CoinMarketCap data. The decline in USDT market cap was first associated with a move into Bitcoin on August 8 when $400 million US dollars was moved from USDT into BTC, but then another $500 million US dollars appeared to have been redeemed when Bitcoin prices crashed around August 18. Liquidity leaving the ecosystem is always negative, said Thielen. Ethereum inched 0.17% higher to $1,635.19 and was down 1.27% over the past 7 days. Most other top 10 non-stablecoin cryptocurrencies traded mixed over the past 24 hours and moved to no higher than 1%. The exception was XRP, which led the winners by gaining 1.07% in the past 24 hours to 0.5048 US dollar, but remained 3.46% lower for the week. Dogecoin led the losers, dropping 0.62% in the past 24 hours to $0.06315 and stayed flat for the 7-day period. Tonecoin, the native token of Tone Network, surged 23.86% in the past week, boosted by the network's launch of its new smart contract programming language, TACT, on August 22. Tone stands for the Open Network, a layer 1 blockchain originally developed by messaging service provider Telegram that withdrew from the project in 2020. Tone launched the beta of its own crypto wallet service, Tone Space, on August 10, which was integrated into the Telegram application at the very start. With Telegram boasting a user base of 700 million people, the platform presents a substantial opportunity for the distribution and onboarding of new users into the Tonecoin ecosystem, said John Stefanidis, Chief Executive Officer and co-founder of Blockchain Infrastructure Foundation, Balthazar DAO. The total crypto market capitalization dipped 0.09% to $1.04 trillion. Trading volume dropped to 0.77% to $19.78 billion US dollars. Now, U.S. stock futures flat after Wall Street booked weekly gains. Main stock indexes across Asia went higher Monday morning as of 9:50 a.m. in Hong Kong. China's Shanghai Composite Indexes, Hong Kong's Hang Seng, Japan's Nikkei, and South Korea's Kospi all logged gains. U.S. stock futures were trading mixed with Dow futures and S&P 500 futures inching down while NASDAQ futures were edging higher. Wall Street close varied at the end of regular session trading Friday, but all three major U.S. indexes booked weekly gains as Friday labor market data sees eased rate hikes worse. The U.S. stock market closes this Monday and will open again on Tuesday. The U.S. unemployment rate rose to 3.8% in August, the highest reading since February 2022, according to the Labor Department on Friday, which could mitigate the concern about the further increases in the U.S. interest rate. Given the uptick in unemployment rate, moderated job gains, and wage growth, as well as an increase in labor force participation, the U.S. August job report increases the probability that the highly data-dependent Fed will not hike again in the cycle. Mohammed A., an advisor to Germany-based financial services firm Alliance, tweeted on Friday. Adding to the optimistic outlook of the U.S. Central Bank's battle against inflation, Atlanta Federal Reserve Bank President Raphael Bostic said on Thursday that inflation is conclusively on track towards 2% over a reasonable time frame, and that the Fed's monetary policy is already restrictive enough to get us there. The Fed raised its interest rate to between 5.25% and 5.50% in July, the highest level in 22 years. Fed Chair Jerome Powell said following July's meeting that the central bank will take a data-dependent approach when deciding how to reduce the country's annual inflation below its long-term goal of 2%. The CME Fed Watch tool predicts a 93% chance the Fed will maintain the current rate at its next meeting on September 20, up from 88% on Friday. Information to notice in the week ahead includes the S&P's August U.S. Service Purchasing Manager Index PMI on Wednesday, as well as a series of Fed official speeches on Thursday. Meanwhile, China's Shanghai Composite Index logged its biggest weekly gains in over a month last Friday as the country ramped up the policy support for its ailing post-COVID economic recovery, according to Reuters on Monday. China Economic Revival Kit includes alleviating home purchase restrictions in an attempt to stabilize its wavering property market, as well as the country's top banks paving ways for more interest rate cuts.